In his latest newsletter, Chris Wood of Jefferies has written in depth about the US bond market sell-off, inflation worries, commodity pricing surges, and in fact has dedicated quite a bit of space as far as rising oil prices are concerned. What Chris Wood is saying is that, remember, so far Chris Wood has been a very strong and vocal proponent of the pro-cyclical trade. He believes that given the fact that you would be seeing the reopening of the economy, he was quite optimistic and quite justified in saying that most of the cyclical companies, cyclical stocks would be doing well. However, what he's saying in this particular letter is that the US bond market sell-off has continued over the past week, and with it there has been an increased potential as far as an inflation scare is concerned. He believes that there is further scope for bond market sell-off to actually go ahead. At this point of time, greed and fear, according to Chris Wood, would be forced to take the inflation scare quite seriously, given the fact that they are actually anticipating the first really justified inflation scare in the American economy on the post-COVID reopening trade since the start of the 1980s. He believes that the real risk as far as the inflation outlook that they are having at this point of time is concerned is the fact that the new COVID variants, which have now recently started, may not be treated or the vaccines may not be effective against these new variants. Also, what he is saying is that he actually believes that inflation will now start to trend higher on a longer term basis, and he believes that at this point of time it is important to take the inflation scare quite seriously. He also says that the prices of commodities, both hard as well as soft, are surging except for gold, and this is something that there is quite a bit of worry over. Now, what he is saying is that the oil price surge that has been seen ever since Saudi Arabia's surprise move to curb OPEC supply has actually proven to be a major positive for the oil market, and he believes that this has been exacerbated by the fact that US production has been declining more than expected. Also, what he is saying is that going forward, despite all of the talk of the end of the fossil fuels, oil demand is back almost near the all-time peak of $100 million barrels per day, and he believes that this particular gap is almost entirely explained by the decline in jet fuel demand. So what he is saying is that oil demand is back almost to normalcy, except for jet fuel demand, given the fact that airlines are still at this point of time under a lot of restrictions. Now, going forward, oil prices, according to them, can definitely surprise on the upside, and he believes that greed and fear can anticipate a $100 plus oil price if at this point of time most of the countries and most of the economies actually open back. So overall, this particular newsletter from Chris Wood, quite worried about inflation, quite worried about rising commodity prices, and they do believe that the bond sell-off could continue a little further.